I'll straight away start with equities first, where for equities, the short-term capital gain is, if it's short-term capital gain, if it's less than 1 year and more than that is long-term capital gain, the short-term capital gain rate is 15% and LTCG is at 10%. Now, of course, LTCG is exempt up to 1 lakh rupees. For real estate, similarly, short-term capital gain is below 2 years and more than 2 years is long-term capital gain. For in this case, short-term capital gain is taxed at slab rate and LTCG rate is 20% plus indexation. In terms of gold, well, for gold, short-term capital gains is considered when it's less than 3 years and more than 3 years is of course long-term capital gain. Similar for gold as well, short-term capital gains is taxed at slab rate, and for long-term capital gain, it's 20% with indexation. Now, in terms of fixed income mutual funds, all gains are taxed at the slab rate. For listed corporate bonds and government bonds, short-term capital gain is considered if it's less than 1 year and more than 1 year is considered as long-term. And in terms of short-term capital gain, it's taxed at slab rates, and long-term is at 10%, and this is without indexation. And lastly, unlisted debt securities. For this, short-term capital gains is considered when the securities held for less than 3 years, and long-term capital gain when the securities are held for more than 3 years. And for this as well, short-term capital gain is taxed at slab rate and LTCG is at 20% with indexation. So these are the various ways where different asset classes are taxed.